Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Monday, the Australian dollar snaps out of its 10-day losing streak and eases the RSI out of oversold conditions and therefore puts the market somewhat in a mixed place as we look towards Tuesday. Nevertheless, the market is still holding to its gains and therefore could see a further rise up towards 64.35 and even possibly stretch into 64.70 before reassessing. With that being said, I'm not overly bullish though, due to the fact the technicals are still somewhat weak, and therefore the upside attempt could give opportunity for market to take profit if they were around this bottom side of the range that was seen around 63.65. However, if we do clear 64.70, that would reinstate the upside case back to about 65.5. But as I've said, the market has still got a lot of work to do to put a bull run in place. Looking at the euro, we also see that the market has managed to snap out of its 6-day losing streak and therefore put in a slightly firmer stance to Tuesday as the RSI breaks through the midway point at 50. However, though, the market is still a little bit mixed as the dollar index, which measures the greenback strength against a basket of 6 major currencies, settled around 103.30 and still at this stage looking to 104 as a potential challenge. Looking ahead to this week, all eyes look to the global economy at Kansas City Fed's annual Jackson Hole Symposium in Wyoming. This year marks the 46th edition and scheduled on the 24th and 26th of August. The year's event theme is structural shifts in global economy, with all eyes on the main speaker, that is US Fed Chairman Jerome Powell. However, it is unlikely Powell will offer specifics about any near-term monetary policy decisions, but investors are hoping to get a clue about whether the July Fed rate hike was the last one of the current cycle or not. Looking to the technical play though, the upside attempts should find the struggle towards 109.25 to 109.70, and like the Australian dollar, may quickly give up and therefore look back towards the bottom side of its range, still holding around 108.45, but towards 107.75.80 may find a bullish challenge. Having posted 2 weak days in dollar yen, the market snaps back to a slightly firmer case as we reject the midway point on the RSI. But keep an eye on this pattern because there is possible some bearish divergence that may see a potential pullback to around 144.60.75. Though the market still has gains in its view that 146 to 148 could be the next challenge if we don't see any pullback. Sterling grinds higher and getting closer to that challenge, which awaits at 127.80 to 128.20. A clearance of this would give further upside guidance and therefore put a bull run in place to 130. Any pullback is likely to be shallow, as we've seen here for the last 6 days, and therefore could find the market respecting the area around 126.30-35. The other factor I see is the RSI has bounced off the midway point, which has put the sterling in a better position to climb higher. Having held into a down challenge for 4 weeks, the market is now snapped out of its 5-day bearish streak and now puts a slight upward pace or a firmer foot that could see a challenge on towards 1,896 to 99 or extending to 1,910.11. As long as we maintain underneath 1,910 or 11, then the market should maintain its course, and that is towards the downside, and to the target of around 1,850 to 70 and reassess. Wrapping up with oil, well, the market is a little bit concerned as the fact that we're seeing some whipsaw price action as news reports state there's a storm brewing in the Gulf of Mexico, which could disrupt West Texas oil and therefore may actually find further whipsaw price action. If it does disrupt, then Monday and Tuesday could be seen slow distribution in oil and therefore put a bit of a squeeze to the upside and look towards its current target around $82.40.60, with any pullback still shallow, but still keep in mind towards 77.30 could show a response to the bullish case. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the intraday report and I hope you enjoy the rest of the day.